Hey guys, Kevin Cage back with a quick cryptocurrency update. This is going to be a different type of video. I'm actually just going to be reading an older interview by Chris Larsen, executive chairman of Ripple, and this will be with the financer and the gentleman that is interviewing him. His name is Chris Skinner. So this is going to wrap up some great points, and I just want to kind of pull it all together. This is a great video for any newcomers, so I'm going to be reading this verbatim, so sit back and relax. Just wanted to do a quick video update before I get into additional research for future videos this weekend. So, right here, question. A lot of people have not heard of Ripple. Can you give us some background? Sure, we've all experienced the inefficiencies of payments. I can physically travel to Europe faster than my payment settles from the US to Europe using a wire service. The delays and costs inherent to today's infrastructure restrict the expansion of businesses, international trade, economic growth, and ultimately financial inclusion. Think of the internet's revolution. By providing common, neutral, global infrastructure for free and instant information exchange, the internet opened up access to and dramatically increased participation in global knowledge and information sharing. It spawned entirely new, previously unimaginable industries. Services like eBay, Twitter, and Uber have changed the world, but wouldn't have been possible without the internet. The same concept applies to payments. Payment systems were created before the internet existed, built country by country as closed loops. Payments need common, neutral, global infrastructure for free and instant value exchange. It's the dawn of the Internet of Value. Ripple is decentralized payments technology that enables free and instant payments in any currency anywhere in the world. It's infrastructure that sews together and modernizes today's payment system so money can move on the web just like information does today. All right, now question comes in. But then some people might struggle with this, as in, why do I need Ripple when we've got Bitcoin? Well, Ripple was born out of Bitcoin's incredible revolution. Bitcoin solved the double spend problem, creating for the first time in history a digital asset and decentralized ledger with no central operator. This breakthrough means people can send this new currency, Bitcoin, to anyone else in the world in minutes and at no cost, instead of days and at the high expense in today's traditional systems. But Bitcoin is only efficient as a payment system if everyone in the world adopts Bitcoin as the one and only currency. And in that scenario, Bitcoin replaces today's systems from ACH to SWIFT to Visa, banks, PayPal, etc. By design, Ripple is optimized to serve as an improved IP-based infrastructure for today's payment systems. Amongst distributed payment technologies, Ripple uniquely works with any currency, dollars, euros, yen, etc., and it settles transactions, including cross-currency transactions, in 5 seconds. So, whereas Bitcoin depends on consumers and merchants adopting the currency and exclusively using the blockchain for payments, Ripple is meant for financial institutions to integrate into their core systems to dramatically increase the speed and lower the cost of payments. Financial institutions and networks using Ripple never have to touch digital currency. They continue to deal in the fiat currencies they deal in today. All right, now the question. So if I summarize, there is the Bitcoin blockchain technology. This technology is fantastic, but it also allows a bit of Wild West to exist. As it's out there and open sourced, the community uses it as money without government, which is not what the government wants. So you have made the technology appropriate more for corporations and banks to use in a structured way. Now, Chris Larsen goes on to say, Bitcoin was designed with a different objective than Ripple. For Bitcoin, the goal was to create a decentralized currency and ledger, independent from any government or central operator. For Ripple, the goal was to create a decentralized ledger that could work with and improve the foundation of today's payment systems. Government regulators, central banks, financial institutions, and corporates aren't interested in experimenting with digital currency or upending the banking and payments industry. They are interested in improving and modernizing the industry. They're open to the benefits of lowering costs and risks in the system, end-to-end transaction transparency, and the possibility of exponential growth in volume, all of which Ripple enables. Ripple is settlement technology that plugs into banks' existing core systems, including compliance, messaging, and other systems. For example, Earthport is fusing with Ripple. And again, this is in 2015, guys. And remember, Visa and MasterCard were going head to head, and Visa finally settled on Earthport and bought them and acquired them for $320 million as a means of using Ripple to basically replace the SWIFT networking system. All right, so for example, Ripple is fusing, and also notice how Chris Larsen was saying that banks aren't interested in experimenting with digital currencies. Well, this is in 2015. Notice that they are, same scenario, whether it's fiat or digital, they still need a bridge asset. All right, so with its robust compliance framework that is known to offer their bank clients as a trusted, secure, real-time payments option. Lastly, because payments on Ripple settle instantly and point-to-point, banks, regulators, and law enforcement have complete visibility into transactions as needed, which reduces costs for everyone involved. And remember, guys, Nick Bougalis was talking about the proposal now to actually have, destination tags becoming private as well for them. So just wanted to go back and forth. All right, next... Again, he's talking about his time at Sibos, and it was kind of a turning point for the company Ripple, where the common question now, and this was at Swift's annual event, was how do we get started? So they're talking about some proof of concepts, talking about Brad Garlinghouse being on board as a former COO of Yahoo. And then again, right here, I guess that the core motivation for banks to use Ripple is that it takes out a lot of the handovers between the likes of Chaps, Swift, and Fedwire, and does it for free. Is that right? Chris Larsen goes on to say, Ripple does not replace local rails and standards like SWIFT. Rather, it connects them. Today, every bank in the world relies on correspondent banking for cross-border payments. Every link in the correspondent banking chain creates costs in the form of fees, risk, and time delays. There are only 5 or 6 global money center banks that provide liquidity for cross-border payments, so foreign exchange rates are not competitive. On Ripple, banks can transact directly with each other instantly and for free. By way of example, Ripple enables a bank like Fidor in Germany to provide Europe to US real-time payments to its customers at a fraction of the cost by working directly with a bank like Cross River Bank. In that scenario, Ripple connects SEPA to ACH and works with Swift's messaging layer, so another bank in the US or bank in Europe could actually use Cross River Bank or Fidor Bank as its correspondent to get more competitive rates in delivery speed, which is a new business opportunity for banks who are not the top 5. Right, next question. It always amuses me when banks talk about cryptocurrencies such as Ripple, and their first question is always, is this approved by regulators? Does the Fed support this approach? Chris Larsen goes on to say, yes, and for good reason. Banks using Ripple are not touching cryptocurrency. They continue to deal in fiat currencies, and Ripple works in synchronization with their existing compliance systems. Regulators in the United States, Europe, and UK and abroad have been proactive about learning about these technologies. They're interested in the potential for improving compliance practices, lowering costs, increasing the speed of payments, and enabling interoperability for global systems. Real-time payments is not just a consumer feature. The speed of payments has huge implications for the cost of liquidity, and as a result, economic expansion. History has shown us, take FPS in UK for example, that if you increase speed and lower costs, volume explodes. Next question. Do you see Ripple currency being a big game player 5 to 10 years from now, or is that just not the main focus? Now keep in mind this article is from 2015. So much has changed. 5 years from now, is this year 2020, aka what Ripple is called the year of the digital asset? Chris Larsen goes on to say, our focus is really on creating utility for Ripple as a payments technology. Keep in mind, guys, they use Ripple and XRP interchangeably, so they're referencing, RippleNet software and XRP as the digital asset. I think in 5 to 10 years, people will use XRP for domestic and international payments without knowing it, just like how I use ACH daily, but I don't need to think about it. As more and more banks adopt Ripple, and they push more and more cross-border volume through Ripple, market makers will need efficient ways to trade less liquid currencies. XRP is a useful tool for market making when a currency trade will take multiple hops. For example, Nepalese rupee to Indian rupee to euros to Kenyan shilling. Because it has no counterparty or direct corridor, XRP is always XRP is always a one-hop trade. So it can go, from the Nepalese rupee to XRP and bridge directly to the Kenyan shilling. So then XRP as a utility for trading creates its demand. Next question. One of the biggest issues in capital markets right now around collateral management and the efficient use of capital and liquidity. I guess what you are saying is that Ripple plays directly to that challenge of the problem of the efficient use of capital. Chris Larsen, and this is the closing paragraph. Yes, that's exactly right. Liquidity management is a big cost to banks today that's intrinsic to the correspondent banking system. Capital outlays for cross-border payments restricts working capital. Keep in mind all of these pre-funded accounts. Imagine if banks don't have to make those outlays and they can instantly and directly transact with the institutions they chose to work with. That's the reality of a Ripple today. Now, just wanted to share that. Now, a few things that stand out to me in particular, of course, is, the topic of multiple hops. Notice that we do have the new protocol with RippleNet called multi-hop software, which makes it even more efficient. All right. Again, sourcing liquidity from their own, users on RippleNet. And the RippleNet is the entire network of banks utilizing their software. All right. Talking about how many intermediaries there really are. Of course, we're aware of the compliance and messaging and the benefits of RippleNet as well, similar to how Swift GPI essentially, copied and uses that. But again, XRP today, on-demand liquidity, is the only software that will actually allow these banks and customers to get rid of these pre-funded accounts, which is estimated from 2 to 5 to as high as $27 trillion of capital, nostro vostro accounts, that has to sit just in case money in banks in multiple currencies all around the world. And now, I did not just pull this $27 trillion is a number to impress you and exaggerate or use as sensationalism. This is actually from Miguel Valles, former CME executive, and he is now head of XRP markets for the company Ripple. So I want to emphasize, this is all sourced. These are from legitimate people with, years and years and decades of experience in the financial world. All right. So when they're talking about Ripple, they're using Ripple interchangeably with XRP. And I just love that concept and that basic, analogy in the beginning. Services like eBay, Twitter, and Uber have changed the world, but would not have been possible without the internet. So the same thing is occurring right now. Without the internet of value, what kind of decentralized applications, what kind of businesses and companies and utility will arise as we are doing this? And, leveling the playing field, creating more and more financial inclusion. These are the things that you have to wonder about and look ahead and see who the real builders are. Will Bitcoin succeed as a speculative asset? Perhaps. I've shared my sentiment with it. I just don't think that anything will have the same ROI as anything else that provides utility. All right. I saw somebody sharing and conversing the other day, and it was really funny. They said, well, Brad Garlinghouse, CEO of Ripple, says, all boats rise. All boats rise during the tide, yet he says that 99% of cryptocurrency will die. So which is it? And again, I believe it's all boats that actually serve a purpose. That is what I believe. And I believe that XRP, Ethereum, a good amount, honestly, more than we realize, are going to serve a huge part in the future financial system, whether it's for decentralized protocols, whether it's, to serve as fuel for the network, you name it. There is utility in a lot of projects, and guess what? There's even more projects that serve no purpose that will be wiped out entirely. 5,000 plus cryptocurrencies on CoinMarketCap? No. In 5 years, I guarantee that will not be the case. I can, pretty much guarantee that. We've already seen the regulations coming down on stablecoins, particularly private stablecoins. They just don't serve a purpose. We've heard Chris Larsen explain the point of view. He's not worried about Libra and currencies like that, even if they do, a US dollar Libra and a, Euro Libra. They're still walled gardens. It's not on a permissionless basis. There has to be some type of update, some version of, a financial reset, I guess. I know that's, controversial, excuse me. I'm still learning some English. But these are the things that you have to consider. All right, creating neutral ground and basically allowing interoperability. So this is why I believe that the XRP ledger will be fundamental in this. Their consensus, their mechanism for governance is unlike proof of stake and proof of work. This type of proof of correctness this type of proof of consensus is very superior, and it dates back well before Bitcoin. This has been planned, this has been in the works for years, and this is my belief. Please, I encourage you all to do your own research. Do not just listen to YouTube, do not just scroll through Twitter, do not just read a few news articles. I want you to source everything and look for it, and I'm telling you, when you start really digging into this, you're going to realize that very few projects have the backing that XRP has, and this is why I am willing to, continuously dollar cost average and learning about this ecosystem, because I see this being massive upside. One of the biggest custody holders or asset managers in the world, along with BlackRock, is State Street. They hold 10% of the world's electronic wealth, nearly $30 trillion assets under management. And they said when everything is tokenized, just like they can go on websites now in, commercial real estate, equities, metals, oil, you name it, cryptocurrencies, of course, and fiat. When this gets tokenized, they said this market, similar to, the days of Netscape in the early 90s, it's going to go trickle, and then flood. Once regulation is here, maybe even just before regulation, because the higher ups really know what's going on, and a higher price would demand regulatory clarity immediately. That is what I believe we will see. We're going to have to, look and see how this pans out. All we can do is wait. If someone says they know exactly what's going on, they're lying to you. There's an agenda at play. I'm encouraging you guys to question everything. You may not agree with everything I say. You may not like how I present things. That's fine. But hopefully I'm inspiring you, or at least, giving you that nudge to do your own research, and you're responsible for yourself. And I just hope, I wish everybody well that's looking to improve their own life and their situation and potentially make generational wealth in a new asset class, be that XRP or another digital asset that you are basically, very confident in the future success of that ecosystem. There's more groups that are building besides just Ripple on the XRP ecosystem, which is one of the many reasons why I am backing this asset. It does not have that central point of failure. You see what I did there? But all right, guys, hopefully you appreciated this. Again, I'm going to link this article in the top of the video description if you want to just, refer back to it. Good read as well. My mouth is super dry. So until next time.